Next week brings a mix of calm and potential catalysts. With U.S. positioning in the Middle East still unclear, a seasonal slowdown just weeks out from Independence Day, and key data on deck, markets are walking a tightrope. I'm Johanna Bota, and here to break down the themes to watch and the events that could reset the tone is StoneX's head of global content, John Kicklighter. Welcome back, John. Let's start with the general market conditions we should expect to deal with next week.
Sure. So market conditions are, and they have been for the past few weeks, more on tenterhooks. We don't have the consistency we like in the fundamental backdrop. There are traded themes, unresolved themes, and multiple of those. At the same time, we have the expectations of the steady, quiet into summer doldrums, which is really at the pinnacle of that 4th of July holiday weekend. But that contrast, that uncertainty creates a sense of illiquidity, both in terms of what kind of uncertainties there are, but also if we don't know what to react to, we just simply, like a herd of cows heading towards the cliff, we just move with uncertainty, potentially moving over the cliff, potentially not. But it's those kind of conditions that we see in the backdrop now. We could just steadily move forward, or we can be punctuated with the high-profile unknown event risk from something like the Middle East headlines, or maybe reviving some of the other issues that we have and are unresolved. Uncertainty over economic growth, the trends of inflation, monetary policy, trade wars, which seems like a year ago, and it's only a couple weeks off of its peak. So that's the kind of conditions that we are dealing with right now, and they're not very favorable ones for particularly investors who like to buy and hold and have confidence heading into the summer.
So then what are some of the big themes that could shake things up for bulls or bears next week?
So in terms of the themes, I would say the Middle East is probably the number one. And unfortunately, it is punctuated by headlines. That type of environment where we are not waiting for a scheduled event risk, like a rate decision or a key piece of data, but instead we have to be glued to see what the headlines are, either to the search browsers or the social media, which tends to be faster sometimes. That is the kind of condition in which you're going to have uncertainty and volatility. So that's the number one concern or focus that I have right now. But aside from that, I think that monetary policy is still a very active theme. However, we're coming off of this very heavy central bank week, and we will be downsizing very, very quickly and abruptly. But the criticisms around monetary policy and the direction that it's taking and the uncertainties that they highlight are going to let us. We're going to see it in sentiment figures. We're going to see it in interest rate inflation expectations through different markets. That's a big theme to watch. And I'd also watch trade wars. I know it seems a million miles away, but it's still there. It still is relevant. And if we are victims of headlines nowadays, that could very readily be a big headline with little warning and our attention distracted somewhere else, and thereby creating that bigger impact.
I agree with you, John. It feels like it's been years, but it's only been weeks. Everything is moving so fast lately. So with all of that in mind, what's the biggest event risk on the calendar next week that could really drive these themes or even shift the market's focus entirely?
Sure. I think through the week, you're going to have probably a heavier first half of the week, but there is some density towards the end. So starting on Monday, wading through a lot of event risk, I would say that the common theme is growth forecast. And you're going to get it through the PMIs, the June PMIs for the developed world. That's a really good proxy for the official government forecasts, which don't come out for many weeks now, and they're a little bit lagging. These are leading indicators for June, so closing out the second quarter. They're going to set a lot of expectation against the backdrop of uncertainty and all these threats and monetary policy and inflation. So it's really good place setter economic data and could be market moving if it shows us some significant surprise. On Tuesday, I'm going to have a U.S. focus, and that's going to be on both the U.S. Conference Board's consumer confidence report. We want to see how the markets are, or the consumer in the U.S., which is the largest consuming body in the world, is evolving with these different themes: the hold from the Fed, the uncertainty in the Middle East, the rise in inflation expectations, particularly with the Middle East oil prices. And the other theme or event that I'm going to be watching on Tuesday is the Fed chairman's testimony in Congress. That's going to be very important. Obviously has been we'll say panned by the U.S. President the past couple of weeks. So we really want to see what he's pressured on. He will keep the same narrative, but good questions that are very pointed can elicit some greater insight from that event. Wednesday's something of a lull in event risk. Maybe watch some of the Bank of Japan's JGB buying, because that monetary policy theme is very contrasting, and it really taps into that breadth of uncertainty for the central banks. Thursday gets more active again. You're going to have, on the U.S. side, trade balance and national activity index, but I'm also going to be watching Japan's Tokyo CPI inflation figures. Those are going to be important for that context of monetary policy and growth, where they meet, and they're increasingly being focused on. Friday is very heavy. Friday, we have Chinese industrial production, you have Eurozone sentiment, you have Eurozone inflation expectations, you have the Fed's bank stress test results, which are probably not going to be very market moving, but if we already have the context of uncertainty, it's going to add to that sentiment, regardless of the probably favorable outcome that it's going to offer, because they're going to give confidence. They don't want to create uncertainty. But the top event probably for that day is going to be the PCE deflator, the Fed's favorite inflation indicator, to see really what the pressure is on that dual mandate, and whether the President Trump criticism has any bearing in the dual mandate focus that the Fed keeps saying that they are sticking to.
I see. A lot to watch closely next week then. Thank you, John. And thank you for watching. For more financial content like this, don't forget to like and subscribe to our channel.